Hey everyone, welcome back to Corporate Decoder. Today, Pyrophyte Acquisition Corp just filed an 8K about a material agreement and extension, and I'm seeing a move that investors need to understand. Quick note, this is not financial advice, just my take on public filings for educational purposes. This filing basically signals they are extending their runway to find a business to buy, and it comes with some new financial commitments. So, Pyrophyte Acquisition Corp, or PYRO as you might see it ticker-wise, is a company that raised money to buy another business. Think of them as a SPAC. A special purpose acquisition company. They give themselves a deadline to find a target company, and if they don't find one, they usually have to give the money back to investors. Now, PYRO has been trying to find a deal, and it looks like they needed more time. They held a shareholder meeting and got approval to extend the deadline to find a business to buy all the way out to April of 2027. So they have bought themselves another year. Part of this extension means their sponsor, which is essentially the team that put the SPAC together, has agreed to do a couple of things. First, they are issuing a new promissory note called the Fourth Extension Note. This note is for up to $1.2 million, and it doesn't pay any interest. It is basically a loan to the company that only needs to be paid back when they actually buy a business or if the company has to go out of business. If they don't find a deal and have to close shop, this loan might even be wiped away. They also amended another loan they already had from the sponsor, called the Working Capital Convertible Promissory Note. They've pushed the deadline for paying this back from April 2026 to the new extended deadline of April 2027. The company can borrow more money under this note for normal operating expenses. The kind of things you need to keep the lights on and keep looking for that business to acquire. Here is a key detail in this amended note. The sponsor can choose to turn up to $1.5 million of this debt into warrants. These warrants give them the right to buy the company's stock later at a set price. They can buy them for $1 each, and then these warrants let them buy the actual stock for $11.5 per S-share. This is important because if the company does well and its stock price goes up, these warrants become valuable. This is a way for the sponsor to potentially make more money if the company succeeds, but it also means more shares could be issued down the line, which can dilute existing shareholders. PYRO is calling itself an emerging growth company. This means they get to follow some less strict rules compared to bigger, more established companies, at least for a while. So, the shareholders met and voted to extend the deadline for the company to find a business to buy. They pushed it from April 2026 to April 2027. This is the main event here. They needed more time and the shareholders agreed. And it looks like the shareholders were totally on board. The vote was overwhelmingly in favor of the extension with over 6.3 million votes for it, and 0 against. That kind of vote shows strong confidence from the existing shareholders that the management team can find a good deal with this extra time. Now, on top of the loan for $1.2 million we talked about earlier, the sponsor is also increasing the amount of cash they will put into the company's trust account each month. Instead of putting in an amount based on a formula or a minimum of $75,000, they are committing to put in $100,000 every month, starting right away in April 2026, all the way until they either find a business to buy or the company liquidates. This is an extra layer of commitment from the sponsor, showing they are willing to keep funding the company's operations while they search for a deal. Because of this extension and the sponsor's added commitment, the company is giving shareholders who might have wanted their money back a chance to change their minds. They've extended the deadline for shareholders to reverse any requests to get their money back from the trust account. So if you were thinking of redeeming your shares, you now have until May 1st to decide if you want to stick around for the extended search. This filing also includes the official paperwork, the actual amendment to the company's governing documents. This is the legal proof that the extension is now official. And of course, they filed the actual promissory note document we discussed earlier. This is the legal contract for that $1.2 million loan from the sponsor. Here is the updated loan agreement for that working capital note with the sponsor, showing the extended deadline and other revised terms. And the report is signed off by Sten Gustafsson, the Chief Financial Officer. Looking at this filing, it tells a clear story. Pyrophyte Acquisition Corp is in a race against time to find a business to merge with. They've successfully extended that race by a year thanks to strong shareholder support. And the sponsor is putting in more money to fuel the search. The key takeaway here is that while they have more time, the success still hinges on finding a good acquisition target. If they don't, the sponsor's loans might be forgiven, but public shareholders could still end up with nothing if the company liquidates. The potential for dilution from those warrants is also something to keep an eye on. The risk I'm watching is whether the sponsor's continued funding and the extended runway will actually lead to a successful business combination or just prolong the inevitable if no suitable target is found. What I am actually looking for is news of a specific acquisition announcement in the coming months. Oh, and the research tools I actually use are linked in the description. They help keep this channel going. That is my take. Stay decoded. If this analysis was valuable, hitting that like button really helps. And subscribe for more deep dives. Don't forget to check out the Discord in the description.